Trump's tariff announcement, an immediate market reaction. In a bold move that sent shockwaves through the global economy, former President Donald Trump unveiled a sweeping new trade policy imposing a 25% tariff on all cars and pharmaceuticals entering the United States from foreign countries, including major trade partners like Mexico and Canada. The announcement, aimed at bolstering American manufacturing by incentivizing domestic production, came with a clear caveat: no tariffs would apply to vehicles made within U.S. borders. Trump framed this as a protective measure to revive American industries, arguing that foreign-made goods have long undercut U.S. workers and companies. However, the policy's unveiling triggered an almost instantaneous backlash in financial markets, reflecting deep skepticism about its feasibility and consequences. Within hours, the Nasdaq, a key indicator of tech and growth stocks, tumbled by 2%, signaling investor unease about the ripple effects on interconnected industries. The broader S&P 500, representing 500 of America's largest companies, wasn't spared either, shedding 1% of its value as traders scrambled to assess the fallout. Perhaps most dramatically, General Motors, GM, a titan of the U.S. auto industry, saw its stock plummet by 5% almost immediately after Trump's statement hit the airwaves. This steep drop underscored the market's fear that the tariffs would disrupt supply chains, particularly in the automotive sector, where parts and finished vehicles often cross borders multiple times before reaching consumers. Analysts quickly pointed out that higher import costs could force automakers to either absorb losses or pass them on to buyers, potentially driving up car prices at a time when affordability is already a concern for many Americans. Trump, however, brushed off the market turmoil, insisting the economy would self-correct and framing the tariffs as a necessary jolt to reassert U.S. economic dominance. Critics, though, see this as a risky bet, one that could destabilize not just Wall Street, but the wallets of everyday consumers. Economic impact on the U.S. economy and consumers. The introduction of Trump's 25% tariffs on imported cars and pharmaceuticals has set off alarm bells about its potential to reshape the U.S. economy, and not necessarily for the better. At the heart of the policy's fallout is the automotive industry, a cornerstone of American manufacturing that relies heavily on a complex web of international supply chains. With foreign-made vehicles and parts now facing steep import taxes, automakers like Ford and General Motors are bracing for a significant hike in production costs. Industry experts warn that these added expenses will likely trickle down to consumers, pushing up the sticker prices of cars at dealerships nationwide. For a nation where car ownership is often a necessity rather than a luxury, this could squeeze household budgets already stretched thin by inflation. On the pharmaceutical front, the tariffs target drugs produced in countries like China and Ireland, nations that dominate the global supply of essential medications. Trump has touted the idea of bringing drug manufacturing back to American soil as a patriotic fix, but he's offered no concrete roadmap for how this would work or how long it would take. In the meantime, the cost of imported medicines could soar, putting life-saving treatments out of reach for many Americans, particularly those without robust insurance. Critics argue this lack of a replacement plan exposes a glaring flaw in the policy. It punishes imports without ensuring affordable domestic alternatives. The broader economic picture isn't rosy either. Some economists predict these disruptions could tip the U.S. toward a recession, with rising consumer prices fueling inflation while businesses grapple with shrinking profit margins. Trump remains unfazed, doubling down on his belief that the market will magically adjust. But for millions of families facing higher costs for cars and drugs, the reality feels far less optimistic. Mexico's strategic and swift retaliation, when the U.S. slapped a 25% tariff on imports from Mexico, targeting everything from cars to pharmaceuticals, the response from south of the border was immediate and multifaceted. Mexico, a powerhouse in North American trade with over 80% of its exports flowing to the U.S., found itself in the crosshairs of Trump's protectionist agenda, particularly threatening its auto industry, which accounts for more than a quarter of its export revenue. Rather than buckling under pressure, Mexico's government, led by President Claudia Sheinbaum, sprang into action with a blend of defiance and diplomacy. Sheinbaum rallied tens of thousands in Mexico City's Zocalo Square, where flag-waving crowds chanted for respect, signaling that Mexico wouldn't quietly accept economic punishment. So, this emotional outpouring was matched by calculated moves. Mexican officials quickly opened negotiations with the White House, securing a temporary reprieve that delayed some tariffs under the USMCA until April 2, 2025. However, the U.S. held firm on taxing steel and aluminum, crucial inputs for automakers, leaving companies like Ford and GM scrambling to adapt. Mexico's markets reeled as the peso weakened, but the nation didn't stop at defense. In a strategic pivot, Mexico imposed retaliatory tariffs on U.S. agricultural exports like corn and soybeans, hitting American farmers hard and showcasing its leverage. Beyond tit-for-tat, Mexico began eyeing new trade horizons, exploring deals with Brazil and China to diversify away from U.S. reliance. This high-stakes chess game revealed Mexico as a formidable player, not just a passive neighbor, willing to protect its economic lifeline while forcing the U.S. to reconsider its aggressive stance. The auto industry hangs in the balance, with both nations locked in a standoff that could redefine their economic ties. Canada's aggressive and unified Counterstrike when the U.S. rolled out its 25% tariffs on Canadian imports in March 2025, targeting goods like cars and energy. Canada didn't hesitate to hit back with a ferocity that stunned observers. Prime Minister Justin Trudeau wasted no time, vowing an immediate and robust retaliation that materialized as a 25% tariff on $155 billion worth of U.S. exports, a historic escalation in North American trade tensions. The initial $30 billion was taxed right away, with the remaining $125 billion set to follow within weeks, zeroing in on key American sectors like agriculture and consumer goods. Canadian provinces amplified the response with their own measures. Ontario's Doug Ford slapped a 25% tariff on electricity exports, threatening power cuts to 1.5 million U.S. homes in states like New York and Michigan. Alberta's Danielle Smith redirected trade toward Europe and Asia, accusing the U.S. of sabotaging long-standing agreements, while Nova Scotia's Tim Houston doubled tolls on U.S. trucks and banned American liquor from shelves. Manitoba and Newfoundland followed suit, targeting U.S. consumer goods and reevaluating business ties. This wasn't just a knee-jerk reaction. It was a coordinated provincial push, showcasing a rare unity in Canada's resolve to protect its economic interests. The tariffs aimed at U.S. farmers, hitting exports like corn and soybeans, underscored Canada's leverage as a vital supplier. Meanwhile, Trudeau's government began exploring alternative trade partnerships, signaling a shift away from U.S. dependence. The fallout was swift. American industries reeled, and financial markets shuddered as Canada flexed its muscle. This retaliation painted a picture of a nation unwilling to be a passive target, forcing the U.S. to confront the real costs of its tariff gamble in a relationship that's long been taken for granted. Market turmoil and economic fallout in the U.S. The rollout of Trump's 25% tariffs on imports from Mexico and Canada in early 2025 didn't just rattle international relations. It unleashed a financial storm that wiped $3.06 trillion from U.S. markets virtually overnight. The Dow Jones took a nosedive, shedding nearly 800 points in a matter of days, one of the steepest single drops in recent memory, while the S&P 500 and Nasdaq each slid into correction territory with 2% declines. This wasn't a mere blip. It signaled deep investor panic as the tariffs' implications rippled through the economy. The automotive sector bore the brunt, with giants like Ford projecting losses of $14 billion and GM facing $6 billion in potential hits as higher costs for imported parts threatened production lines and profitability. Beyond cars, the construction industry braced for a blow as tariffs jacked up the price of raw materials like steel, driving housing costs higher at a time when affordability is already a crisis. Consumers weren't spared either. Everyday goods grew pricier as import taxes piled on, stoking inflation fears. Economists pointed to grim signs. The Atlanta Fed's Cone 2025 GDP forecast dipped to a negative 1.8%, a stark reversal from the 2.3% growth seen in late 2024 under Biden. Investors fled to U.S. Treasury bonds for safety, pushing yields lower, a classic recession warning. The chaos stemmed from disrupted supply chains and retaliatory moves by trade partners, amplifying the tariffs' damage. For American families, this translated to shrinking wallets and scarcer jobs as businesses cut corners to survive. Trump's camp touted the policy as a bold fix for domestic industry, but the immediate reality was a market meltdown that left Wall Street and Main Street questioning whether this high-stakes experiment was pushing the U.S. economy toward the edge of a cliff. Global trade realignments and emerging alliances, Trump's aggressive tariff policies, slamming 25% duties on imports from Mexico and Canada, have sparked a seismic shift in global trade dynamics, pushing affected nations to forge new paths outside the U.S. orbit. Mexico, reeling from the threat to its auto exports, didn't just retaliate with tariffs on U.S. crops like corn and avocados. It turned its gaze outward, pursuing fresh trade deals with Brazil, China, and other South American players. This pivot aims to loosen Mexico's economic tether to the U.S., which absorbs over 80% of its exports, signaling a bold move to diversify and safeguard its future. Canada, equally stung by the tariffs, followed suit with a multi-pronged strategy. Provinces like Alberta eyed Europe and Asia for new markets, while the federal government explored partnerships to offset losses from taxed energy and goods. The real game changer, though, lies in an unexpected alliance brewing between Canada and South Korea. With the U.S. raising barriers, South Korea, hungry for oil, gas, and metals, sees Canada as a resource-rich alternative to volatile Middle Eastern suppliers and a backdoor into North America without tariff headaches. This budding partnership isn't just a stopgap. It's a long-term play to build a supply chain linking North America and Asia, potentially sidelining the U.S. as a trade linchpin. For Canada, it's a chance to flex economic independence. For South Korea, it's a lifeline to dodge Trump's trade war collateral damage. If successful, this could redraw trade maps, boosting both nations while challenging U.S. dominance. New peak. The tariffs meant to protect American interests might instead be birthing a rival network, one where Mexico, Canada, and South Korea thrive by turning away from a once unquestioned trade partner. Trump's policy flip-flops and strategic confusion. At the core of Trump's tariff blitz lies a tangle of contradictions that have left allies and adversaries alike scratching their heads. His administration rolled out a hefty 25% tariff on imports from Canada, Mexico, and the European Union, framing it as a tough stance to protect American jobs and manufacturing. Yet, in the same breath, Trump dangled the possibility of easing tariffs on China, a frequent target of his ire. If they'd play ball on issues like TikTok ownership, this abrupt shift hinted at a willingness to bargain with a rival while strong-arming neighbors, exposing a lack of coherent strategy. For Canada and Mexico, the tariffs felt like a betrayal, given their deep economic ties to the U.S. under agreements like the USMCA, which Trump himself had championed. Meanwhile, suggesting a deal with China over a social media app seemed impulsive, rooted more in personal whims than in any clear economic or diplomatic playbook. Critics pounced on this inconsistency, arguing it undermines America's credibility on the global stage. How can allies trust a partner that swings from confrontation to compromise without warning? Trump pitched the tariffs as a masterstroke to boost U.S. leverage, but the mixed signals have fueled uncertainty instead. Allies face punishing duties while a geopolitical foe gets a potential pass, leaving businesses and governments guessing about the next move. Some see it as a negotiating tactic, a chaotic bid to keep everyone off balance. Others call it a policy devoid of vision, driven by short-term headlines rather than long-term gains. Either way, this zigzag approach risks alienating trade partners and weakening the U.S. position as the world watches a leader whose bold promises clash with his unpredictable execution. Public outrage amplified by celebrity voice. As Trump's tariff policies unleashed economic upheaval, a groundswell of public frustration found a megaphone in Hollywood icon Robert De Niro, whose scathing critique of the former president ignited a social media firestorm. Wow. In a raw, no-holds-barred statement, De Niro branded Trump a dangerous figure, a liar and fraud whose campaign promises, like the border wall and economic booms, were little more than hollow gimmicks designed to dupe voters. His words, delivered with the gravitas of a decades-long observer of American life, struck a chord, racking up over 5 million views and 350,000 mentions online within a day. De Niro didn't mince words, accusing Trump of undermining democracy itself, pointing to his refusal to accept the 2020 election results and warning of a power grab if he returned to office. This wasn't abstract rhetoric. Polls from late 2024 showed 62% of Americans felt their leaders prioritized self-interest over the public good, and De Niro's bluntness tapped into that simmering betrayal. Social media erupted, with Gen Z memes and independent voters driving the conversation, turning his critique into a viral call to action. He painted Trump not as a statesman but as a thug, a bully whose threats and erratic behavior, from rally outbursts to legal battles, over 30 charges by March 2025, signaled moral rot in politics. For many, De Niro's voice cut through the noise, amplifying fears that the tariffs were just one symptom of a broader unraveling. His warning that democracy hung in the balance resonated as a stark contrast to Trump's tariff-fueled chaos, galvanizing a public already anxious about rising costs and shrinking freedoms. This wasn't just celebrity commentary, it was a cultural moment that crystallized a nation's unease. A future hanging in the balance. Trump's tariff gambit, imposing 25% duties on imports from Mexico and Canada, has thrust North America into uncharted waters, with the clock ticking toward a potential full-scale trade war. The temporary suspension of some tariffs under the USMCA, brokered after Mexico's fierce pushback, is set to expire on April 2, 2025, leaving a narrow window for resolution. If no deal is struck, the full weight of these taxes will crash down across all sectors, threatening to upend industries like automotive, where supply chains crisscross borders seamlessly. The stakes couldn't be higher. North American automakers like Ford and GM are already warning of factory closures and price hikes. Ford's F-150 could jump by thousands, while electric vehicle production falters under costlier, Mexican-sourced batteries. Beyond cars, the broader economy teeters as markets brace for more losses after shedding $3.06 trillion in value. Canada's retaliatory tariffs on U.S. goods and Mexico's counterstrikes on agriculture have escalated tensions, hinting at a fracture in a once stable trade bloc. The uncertainty looms large. Will the U.S. back off to salvage ties with its neighbors or double down and risk isolating itself? Trump casts this as a win for American workers, but the reality suggests a high-wire act with no safety net. If negotiations fail, the fallout could ripple globally, destabilizing trade networks as Mexico and Canada pivot to new partners like China and Europe. For everyday people, it's a question of affordability. Cars, medicine, and groceries could become luxuries as costs soar. The future of North America's economic integration hangs in limbo, with each side digging in for a fight that could either forge a new equilibrium or shatter decades of cooperation. One thing's clear, the next move will shape the continent for years to come. Conclusion: a reckoning for America and beyond. Trump's tariff experiment has ignited a firestorm that transcends borders, leaving the U.S., its neighbors, and the global economy at a crossroads. What began as a brash bid to reclaim American manufacturing supremacy has morphed into a volatile standoff, with Mexico and Canada not just resisting but redefining their roles in a shifting world order. The $3.6 trillion market plunge, the looming threat of a trade war by April 2025, and the specter of recession, projected at negative 1.8% GDP growth, paint a sobering picture of a policy that may cost more than it gains. For American families, the fallout is tangible. Cars and drugs grow pricier, jobs hang in the balance, and trust in leadership frays, as Robert De Niro's viral rebuke of Trump as a dangerous fraud echoes a broader disillusionment. Yet the story doesn't end with U.S. turmoil. Mexico's strategic pivot to Brazil and China, Canada's bold retaliation and alliance with South Korea, signal a tectonic realignment, new trade networks rising to challenge America's dominance. This isn't just about tariffs. It's a test of resilience, adaptability, and the limits of unilateral power. Unilateral power. Will the U.S. find common ground with its neighbors, or will it push them further into the arms of global rivals? The answer will ripple far beyond North America, reshaping supply chains, alliances, and economic fates. So voila. Trump's gamble has unleashed unpredictable forces. Some see chaos, others a reckoning long overdue. As the deadline looms, one certainty emerges. The choices made now will dictate whether this chapter ends in recovery or rupture, not just for the U.S., but for a world watching its leading economy teeter on the edge.